Everyone, welcome. How to use charts and indicators to inform trading decisions is what we are looking at in this video today. We want to look at how you can use technical analysis for crypto trading. Many people have crypto, or crypto is a reigning thing among the young and the old today on how to make money online. It is easiest through crypto, and at the same time, it is also easy to lose money through crypto, especially in crypto trading, just like in forex trading and also stock trading. Crypto most times move more than even stocks and forex, and crypto is traded 24 hours, 7 days a week. But in the case of forex, they go on holidays or they go on break, take a break on Saturday and Sundays. So in this video, I want to show you how you can use charts and indicators to inform trading decisions, and that means using technical analysis for crypto trading. Many people have followed my prompt and have done crypto airdrops, and they have some cryptos here and there. Some airdrops have been given to them here and there, and now they want to make more money with it by trading. And that is why I'm making this video for such categories of people. So technical analysis is a widely used approach in cryptocurrency trading, helping traders make informed decisions by analyzing historical price data and market trends. This method involves studying charts, patterns, and indicators to predict future price movements. This guide in this video provides a foundational overview of technical analysis in crypto trading, including essential chart types, popular indicators, and strategies to help you optimize your trades. Now, let's talk about the key components of technical analysis. The first component of technical analysis is the price charts. Price charts are the foundation of technical analysis, helping traders visualize market trends and price movements. Common types of price charts include line charts. Line charts are simplified charts that connect closing prices over time. It is ideal for spotting general trends. Then we also have the candlestick charts. Candlestick charts are detailed charts showing open, close, high, and low prices within a given period. Candlesticks help traders identify trends, reversals, and price patterns. Then we also have the bar charts. Bar charts are similar to candlestick charts. Bar charts display opening and closing prices along with highs and lows. Now, let's look at another aspect, which is the support and resistance level. In fact, some people base all their trade, all their systems on support and resistance. Recently, Pi coin was listed and it was launched on the 20th, just about a week ago, and I saw it came down, then it was moving within a range. And within that range, they have the support, you have the resistance. And I was saying that a breakout is expected. If it cross the resistance line, if it cross the support line, it's going to go down. If it break the resistance line, it's going to go up. And what happened? It broke the resistance line, that is up, and then it went up more than double the previous price. So support and resistance level. Support, the price level where demand is strong enough to prevent further price drops, while resistance is the price level where selling pressure is strong enough to prevent further price increases. Identifying these levels help traders anticipate potential reversals or continuation of trends. Now, let's look at popular indicators for crypto trading. Number one indicator that is used for crypto trading and which I started with in forex trading is moving averages. Moving averages smooth out price data to identify the overall direction of a trend. Types of moving averages include simple moving averages, SMA. This averages the closing prices over a specific time period. Then we also have the exponential moving average, EMA. This gives more weight to recent prices, making it responsive to price changes. Then we also have number two, relative strength index. This is another indicator, also called RSI. RSI is a momentum oscillator that ranges from 0 to 100. It identifies overbought and oversold conditions. In the case of Pi coin that was launched last week, once it was launched for $3.40. Then it dropped to $1.60. Then the same day, within 24 hours, it dropped to about 60 cents, and it ranged from 60 to 80 cents for a while. Now you can see from $3.40 to 60 cents, that means it has been oversold. So the RSI will show you that this currency has been oversold, and then from there you can know that the next thing to have to happen is a buy, and that was what exactly happened. So the RSI identifies overbought and oversold conditions. Above 70, it indicates overbought conditions, signaling a possible price correction. So if it's above 70, it means that it's overbought. So the price is likely to correct itself and come down in the opposite direction and sell. While below 30, it indicates oversold conditions, signaling a potential buying opportunity. So when you see that it's oversold, then you position yourself to buy. Then another indicator is Bollinger Bands. Bollinger Bands consist of a moving average and two standard deviations. These bands expand and contract based on market volatility, helping traders identify potential breakouts or reversals. Then we have the moving average convergence divergence. When I started forex trading, I used only moving MACD and MA, and I'm telling you, I made money from it. So moving average convergence divergence MACD is a trend following indicator showing the relationship between the two moving averages, usually the 26-day EMA and the 12-day EMA. It consists of MACD line, the difference between the two EMAs, and it also consists of the signal line, a 9-day EMA of the MACD line. When the MACD line crosses above the signal line, it can indicate a buying opportunity, while a cross below can signal selling opportunity. These indicators are not 100% accurate, but at least they can give you more than 60 to 70% accuracy. They have been tested over time, and in most cases, they have 60 to 70% accuracy. So in forex, even if you can place 50%, you can win 50% of your trade, depending on your risk to if your risk to reward ratio is well set, you are still going to break even and make profit. Now, let's talk about volume, which is another indicator. Volume indicates the number of units traded within a specific time period. High volume typically confirms a trend, while low volume may indicate weak momentum. So like yesterday, up to now, there was a high volume on Pi coin. And in fact, if you check most of this thing, they say it's top, it is hot. Most of the brokerage exchanges, when they list the hot cryptos or the hot forex, the hottest pairs, they list them the first 5, and they list the top gainers, top losers, and others like that. So when they say it is hot, that means it has volume, and when it has volume, that means action and interest is on it, and you can, if you know what you're doing, you can make money from it. So let's look at common technical analysis strategies. Now we have looked at the indicators. How then do you analyze, do you do the technical analysis? Number one is you should follow the trend. That is trend following. Traders identify the overall direction, uptrend or downtrend, and aim to buy during uptrends and sell during downtrends, using moving averages to confirm trends. Another strategy is breakout strategy. Breakouts occur when the price moves beyond a significant support or resistance level, often signaling strong price movement. Traders often buy during an upward breakout or sell during a downward breakout. Then we also have the swing trading. This strategy involves capitalizing on short-term price fluctuations within an established trend. Swing traders often use indicators like RSI and Bollinger Bands to identify entry and exit points. Now, let's talk about the tips for using technical analysis in crypto trading. Number one tip is that you have to combine multiple indicators. As a starter, I will just advise you to use MACD and MA for a start. That was what I started with. Later, you can also be looking at the pin bar and many others. So you combine multiple indicators. Relying on one indicator alone can lead to false signals. Combining multiple indicators can provide more reliable signals. Then apart from this, you have to stay updated on market news. While technical analysis focuses on historical data, crypto markets can be highly sensitive to news and social sentiment. Use technical analysis with market news for a holistic approach, just like what happened into Bitcoin yesterday. There have been the projection that Bitcoin is going to go up, and people have projected that from the 25th. I don't know how they got to know that in the US and the advanced countries, they could not trade Bitcoin from the 20th to 24th, that it was on the 25th that they could start trading it on their own exchanges. So based on this, from the 20th, most Africans that had the Bitcoin, they were selling, and then the price dropped. Then it came to 25th, 26th, the price went up because the buyers, most people in the advanced country, they have come in. So that information was already on ground now, and then you now see the trend going up. Now, if you have that news and then you now use technical analysis, you see that they work hand in hand, then you can go on and combine that and make your profit. Now, another strategy is to practice discipline. Cryptocurrency markets are volatile and technical analysis isn't foolproof. Set stop loss orders, manage risk, and stick to your trading plan to minimize potential losses. So if you have a trading plan and you stick to the trading plan to minimize potential losses, you see, don't wait for anybody to be telling you that buy, sell. The person too can fail. Because of that, try to learn how to also trade by yourself and analyze the market and know when to buy and put your stop loss and everything. And if you do that, you are going to be glad you did. Then don't just sit down and be trading from morning till night. Maybe analyze the market in 30 minutes and 1 hour. Look at the charts and study the charts over 1 week, 1 month, 1 year. Look at all the charts over 1 day, over 2 days, over 4 hours, over 1 hour. Then place your trade based on your analysis and then provide your stop loss and take profit. The essence is that when you place a stop loss, when the price reaches that, it automatically, whether you are there or not, it will take your profit and add it to what you have. If you set stop loss also, when the market is going against you up to a point where you have analyzed that the market should not go down to this point, you get to that point, then it will take you out so that you will not lose all the money in your account or you will not lose a lot of money. So most early traders that do not use stop loss, they blow their account, they lose all the money. So don't let that happen to you. So technical analysis offers powerful tools for making informed decisions in cryptocurrency trading. By mastering charts, indicators, and trading strategies, beginners and experienced traders alike can enhance their trading results. While technical analysis doesn't guarantee success, it is an invaluable tool for understanding market trends and minimizing risk. So I want to say a shout out to Onoha, who has been a strong supporter of my YouTube channel, and he has been on the membership. He paid for my membership. I want to thank you for that, and I look forward to doing videos to acknowledge you more and more. So Samson Honora, I really thank you. This is a shout out to you. And others also, I want to join my membership. Membership have privileges. They can ask me special questions. They can, when I make many videos, there are some that are just dedicated to them, and then many other things like that. So I'm going to talk to you in the next one. Please subscribe to this channel, like this video, share the link of this video to your family and friends, and drop your comments and questions in the comment section below. Let me know what you think about this cryptocurrency and other aspects that we are going to talk about. I'm going to talk to you in the next one. Before then, you can see this video from my channel. It is the one showing on the screen right now. Go ahead and watch it. I'll see you in the next one. Bye-bye.